What other reasons do people buy gold?
They say that if you were to basically pull together all of the gold that has ever been mined that is above ground, it would only fill 3 Olympic-sized swimming pools. Just shows the scarcity of it. Much of the recent price hike has been down to uncertainty in the market. The gold price is up 34%, platinum is up 51%, and silver is up 42%. Geopolitics plays a massive part in the price of gold as well. And something else at play in all of this is BRICS, this group of nations that are moving away from their reliance on the West, Brazil, Russia, India, China, South Africa, and are implementing things like their own monetary system. These are some of the big economies that are buying huge amounts of gold at the moment and are utilizing gold as a reserve asset and sort of moving against that reliance away from the dollar, so de-dollarization.
In these different surges that have happened across like platinum, silver, and gold, is there any surprising new behavior that you've seen among UK investors?
The most surprising thing for me at the moment is you'd anticipate that a lot of customers would be selling given the gold price is so high. The last few days we've seen usually the average is 9 buy transactions to every 1 sell transaction through our website on our trading platform. We've seen 17 buys to every 1 sale.
So talking about investing in gold, what are the different types of gold investments available to people today? All right, welcome back to another episode of the podcast. I'm your host, Atto. We have a special guest in the building. I'm here with Toby Osborne, who's the head of wealth management at the Royal Mint, one of the most historic institutions in the UK with over 1,100 years of history. Toby has a front row seat to how people are buying, selling, and thinking about gold, silver, and platinum in 2025. In this conversation, we'll unpack the history of gold, why it's hitting record highs, how people are actually investing in it, and what role it can play in your portfolio. Toby, how are you doing today?
I'm good, thank you. Thanks for having me.
Welcome. I'm looking forward to this conversation because it's been a long time coming. A lot of people have been asking about gold. A lot of people want to know more about it. It's setting record highs, so I think it'll be interesting to talk about it. And you obviously work for, one of the first players that actually dabbles in this area. But before we get into things, can you share what inspired you to personally step into the world of wealth management and precious metals?
Wow, it was by chance, really. I used to work in media, sort of fresh out of university, and then my boss, who employed me into my first role, got a job over at the Royal Mint, taking on the precious metals investment department as director at the time, and then he basically called me up after 6 months in the role and was basically like, this department is growing exponentially at the moment. We need somebody to come in and sort of grow the kind of account management, wealth management function within it. And yeah, I jumped at the opportunity, and I didn't really know a huge amount about the Royal Mint at the time, but given it's been around for over 1,100 years, there's so much to kind of learn both about the organisation and how we've sort of got to this point where we're offering precious metals as an investment option among a plethora of other things as well.
Yeah, and we're gonna deep dive into all of those different areas because it is very interesting that precious metal is such an interesting thing because like there are so many different types of metals. Some have value, some don't, but there are things that do have that value. What do you hope people will gain from your work, not just financially, but in how they see money and security in their lives?
Yeah, I mean personally for me, I hadn't really kind of considered precious metals as an investment option. I think really my investment journey really began at the start of COVID. And I think that was when cryptocurrency investing kind of came into the spotlight for a lot of us. We were sort of sat around, some on furlough, some in full-time jobs, and we're almost looking at ways of accruing passive income whilst doing the kind of day-to-day. And obviously, as we know, the crypto market is highly volatile. And I think precious metals investing can be a really nice sort of balance to that in terms of, it's historically, if we're to look at gold, for instance, is seen as a safe haven investment, the perfect hedge for against a kind of riskier portfolio of whether it's, the equities market or cryptocurrency, as I said. So really it's my job, certainly at the Royal Mint or working on behalf of the Royal Mint, is to really lean on the safety and security element of it and all of the different services and offerings that we do have. And it's interesting for me as a millennial and then the kind of Gen Z population as well, I think naturally are always after or seeking these immediate returns, and gold's not necessarily known for that. But in terms of our customer base, Gen Z and millennials actually make up a wider portion of it by comparison to the greater UK population as well. So that sort of age demographic are actually really pro gold as an investment option, which is really interesting. And I think that's maybe because they've sort of lived through, recessions, the financial crisis in the late noughties, COVID now as well. So really value safety and security. And that's what people tend to think of gold as providing them with.
Okay. It's interesting that you're saying that millennials and, Gen Zs are taking it up, because I guess people would think that gold is something, when they think of gold, it's like you have a gold bar, maybe you've got it in a personal vault of yours. And I think we're going to demystify, that there are lots of different ways to own gold. What would you say in terms of shocking, experiences? What's been one of the most shocking experiences that you've seen people make with gold, something that's wiped out their wealth instead of protecting it?
Interesting question. I mean, it staggers me every day, a certain portion of our customer base's mentality and as to the reason why they're getting into gold in the first place, and their view on the world, or where at least the world is heading. I don't want to start scaremongering or anything like that now, but I think historically, typically people have had a really sort of pessimistic view of the world, and view gold as something to really fall back on during times of crisis from a monetary perspective. But I think now the view is changing in that it can actually be a perfect, as I've said earlier on, diversifier to a riskier portfolio. I think the World Gold Council, for example, suggests that an investor should have anywhere between 2 and 10% of their portfolio in gold itself. But really, I mean, it's seen as a long-term investment. And I think I have seen, and it's kind of, because I didn't necessarily know maybe the story behind the investment in the first place, but I've seen people who've perhaps sold a property, for instance, bought gold. Naturally, with any investment, you pay fees to get in, you pay fees to sell, and have expected a kind of it to be a store of wealth, as it's often labelled, and have subsequently maybe not lost a huge amount of money, but lost a period of money over 6 months when a new property's come on the market for them that they wish to buy, and then they want to liquidate that money, and then they've seen that their investment value has gone down. It shouldn't be something that is viewed as a short-term way of making returns. It's got to be something for the longer term. So I have seen that happen, and of course I'm very careful to now ask, customers, clients of ours, what their investment objectives are, so we can sort of warn against that, because it should be something you're prepared to hold for a period of time, because historically it's shown those kinds of returns in the long term. But having said that, you sometimes get some amazing stories. We had an investor last year who invested, and we'll get onto it as you said, in gold in a certain form, and just timed it to absolute perfection. And then I think 6 months later had made a CGT free 80 grand profit on that investment. And it wasn't a particularly big, by comparison, investment value. It was just so perfectly timed that he then sold up and was able to get out and appreciate his returns in a cost effective way. So
I don't want to obviously encourage people now with that, but that's a smart person. When I say that's a smart person, because some people would wait and not liquidate, but the fact that they were like, you know what, I'm going to liquidate, I'm going to bank in my returns, I made enough returns, I don't need more than this, I'm good, is that's a sophisticated person for sure, buying at the right time and selling at the right time. Wow. And selling your property for gold, I don't know if I would have ever thought that somebody would do that. Okay. Okay, so if we move on into the history of the Royal Mint. So as I mentioned, the Royal Mint has been around for over 1100 years. How did it evolve from making coins for the crown to becoming a place where people can now invest in gold, silver and platinum?
Yeah, so the Royal Mint was founded by King Alfred the Great in the year 886, as he was staving off Viking invasion at the time, and that was when the first silver penny was struck with his monogram on the reverse of the coin. Coins had been being struck and minted for a couple of 100 years prior to that, but that was the sort of foundation of the Royal Mint at that point. And then we've been producing currency, or circulating coin, as it's sort of deemed internally, for the monarchy and His Majesty's Treasury as it is now, ever since then. Gold itself, or at least we struck the regular gold coins, I should say, since the 1340s. Lots of people will know about the sovereign coin as well. That's a sort of more commonly known gold coin, which I'm sure a lot of people that are listening into this will have maybe a couple tucked away in their top drawer, or their grandparents might from over the years. But if you sort of fast forward to the modern day, now we're a fully functioning business that has had to adapt quite significantly because of people's spending habits changing. So obviously we're moving now towards more of a cashless society. There's less need for circulating coins. And we've wound down the currency business quite significantly. We used to actually have contracts with other nations across the world where we produce currency for Commonwealth nations, Australia, Hong Kong, some of the Middle Eastern countries as well. And now we have a commemorative business that will produce coins and sets to mark British institutions, whether it's Harry Potter, whether it's music legends like David Bowie or Queen, for example. And we'll also produce ranges to mark significant moments in British monarchy history as well. So that's the commemorative coin side of things. Then you've got historic coins, where the collecting coin market is a massive one, and people will buy rare historic coins that they think might go on, and there's some great examples of it to fetch huge amounts of money in years to come. Then you've got our precious metals investment business, and then more recently, named after the year that we were founded, 886, we've just produced a jewelry brand as well. So the jewelry brand uses silver and gold extracted from electronic devices, and it's made into minimalistic, beautiful jewelry. We have a store in Mayfair in London, and then sort of an e-commerce setup as well. So the business has evolved massively. We're now just producing coins for the Treasury here in the UK. That's the only contract that still exists. But actually, they've noticed more recently that there's been a bit of an uplift in the amount of coinage needed in the UK, because people are struggling a little bit more and are using coins to actually budget, for weekly shops and that sort of thing, rather than sort of always using digital payments, which maybe are a little bit trickier to track. So yeah, it's interesting.
Wow. So it's evolved a lot in that time, from
Big time.
like you say, creating coins, although, creating coins, but now being like that, not medium of exchange, but facilitating the exchange of, the purchases of like gold, platinum and silver, maybe even more in the future. So you spoke a little bit about, crises, people turn into gold for crisis. What other reasons do people buy gold? Why are they interested in it?
Yeah, I mean, gold really, I think, has sort of hit the headlines since the financial crisis in the late noughties, really. I think it's something like British Asians, which make up 5% of the UK population, actually equated to 90% of the gold market in terms of buying and selling gold towards the end of the noughties. And that is sort of turned on its head now, with it becoming much more prominent as an investment option. It's viewed as a safe haven asset. It's a commodity ultimately. They say, certainly with gold, that if you were to basically pull together all of the gold that has ever been mined that is above ground, it would only fill 3 Olympic-sized swimming pools. Really? So just shows the scarcity of it.
Okay, so it's scarce, yeah.
Platinum, even more so, it would only come up to your ankles if it all melted down in 1 Olympic-sized swimming pool. So it just shows the scarcity of the commodity itself. And it's viewed to have stronger sort of long-term prospects, essentially, than some other assets. And if bought in the right form, there's obviously ways of doing it in a tax efficient way. So crucially, here in the United Kingdom, if you buy gold coins struck by the Royal Mint, they are exempt from capital gains tax. And with a budget coming up in November, of course, here in the UK, and rules that changed when the new Labour government first came in with regards to capital gains tax thresholds, and the rates in which we're paying. That then consecutively gave the Royal Mint, I think, 3 record bullion coin sales quarters, because people were choosing to move their money away from other investments that were deemed unstable, or there was a sort of uncertainty in the market, and then push that towards gold. And gold coins are obviously, for the CGT exemption reason, a really popular option at that point.
Okay. That's fascinating to hear, especially the tax. Everybody wants to save tax, right? So it's fascinating to hear the fact that, especially with what's going on right now in the UK economy, and the fact that we have all these budgets and, the concerns around tax rises, cuts here, cuts there, right? It's fascinating to hear actually that movement on the gold side, because I don't think that was so obvious to many people. XTB is currently giving new clients a free share in Rolls-Royce when you open an account, verify it, and make your first deposit. And within a few days, that share is yours. I use XTB myself because it makes investing simple and affordable. You pay 0% commission when investing in stocks and ETFs, and you can earn up to 4.25% interest on any cash sitting in your account. You also get access to 10,000 stocks, ETFs, can start with as little as £10 and enjoy quick, secure and free deposits and withdrawals. It's one of the most straightforward platforms I've used, whether you're just starting or scaling your investment portfolio. So if you'd like to kick off your investing journey with a free Rolls-Royce share, check out the link below or use code SAVVY and sign up today before the offer closes on the 30th of November 2025. Please note, the free stock promotion applies to the United Kingdom only. Your capital is at risk. The value of the stock may fluctuate. Limited availability. T's and C's apply. So you mentioned something, and I just want to kind of clear up for people. A lot of people use this term store value. Gold's a store value. They've used it for Bitcoin too, which we're going to talk about a little bit later. What does that mean, store of value, when people say that? Well,
I think for me, it's as simple as it's there, it's tangible. You can have it, you can hold it, you can take delivery of it, you can store it in a safe, you can obviously store it. The Royal Mint has a vault down in South Wales, which is where the custodians of billions of pounds worth of precious metals stowed away in the South Wales countryside. But it is a store of wealth in that it's tangible, it's of dual nature, so it's quite nice to look at, of course, as well. And that is it. And then, gold itself, obviously currencies previously have been pegged back to gold. So it's got a long history and proven track record, essentially, gold. And I think that's where it kind of gets its inherent value from in the first place. And then if you compare it to some of the other asset classes over the last 5, 10, 20 years, its compound annual growth rate either beats or competes with other major asset classes. Over the last 5 years, 12%, up 12% on other major asset classes. Okay. Over 20 years, 12%. So yeah, it's got a proven track record over a period of time. And of course, in recent days, even we've seen more all-time highs with the gold price. It's remarkable that it just sort of keeps going and going, and we're busier than ever as well. So. Yeah.
So my thing is, right, so what I find intriguing about gold is the fact that, thousands of years people have placed a value on it, but some of the arguments people say it provides no dividends, no cash flow. So why does it have value compared to like other metals? Why isn't just like, I don't know, like brass got value or something else have that much value? And like you say, it keeps on going up.
Yeah, I think it's the scarcity of it. I mean, it's obviously traditionally been viewed as a safe haven when stock markets tumble. Yeah. So it's been used to stabilize an investment portfolio. But you're right. I think it's inherently its beauty. It used to, I think, 50% until last year, because obviously the rising cost of gold has meant when it's produced into jewelry, for instance, it doesn't become quite such an attractive proposition because people's disposable income comes down and they don't necessarily want to buy or at least pay premiums for the luxury of owning jewelry. But until last year, 50% of the total gold consumption was attributed to the jewelry market. And now, during all this uncertainty that we have in the world with the US cutting interest rates and Donald Trump announcing and saying all sorts of things at UN meetings, as we've seen in the last few days as well. And with all this uncertainty in the world, you're seeing other central banks around the globe consecutively buying huge amounts of gold that can essentially stabilize economies, and is using that and pulling, I think, their reliance on the US dollar as a reserve to their own individual currency, pulling that away and replacing it with gold. So demand is increasing, and we're seeing that momentum follow through with the price as well.
Yeah. Why gold in terms of crises out of everything else? Because it's always interesting when we think crisis. It's true. What I've known, even though I don't know that much about gold, just putting that out there, I've always heard in times of crises, that's where everybody goes to. And I'm thinking, why that? Why gold out of everything when we're talking about a crisis?
I know what you mean. I mean, in 2025 already, I think we're up to now 21 all-time highs.
Wow.
I think there was 40 or over 40 last year.
Yeah.
And again, much of the recent price hike has been down to uncertainty in the market. We've had some of the bigger economies, places like Japan. I think the Prime Minister recently resigned, basically said that the economic situation in Japan is worse than the Greek sovereign debt crisis, for example. You've got Trump at war essentially with executives at the Federal Reserve. I think US debt is at an all-time high as well. So all these factors mean that individuals who are investing, as well as the sort of central banks, I think have less confidence in the stock market predominantly, and are looking to move funds away from the banking sector, which they fear could, I guess, as we've seen previously with Silicon Valley Bank, for example, end up in hot water and want to move it into a secure investment. But I totally take your point. Why kind of gold in the first place? And I just think it's sort of stood the test of time, and because it's something that used to be used as currency fundamentally, it's kind of accrued its value from them, and just more recently we've just seen this huge run in its price, which has meant that more people are flocking to it.
Yeah, exactly. Okay. Yeah, because I think it is good for people to know why, especially now, because people will be hearing gold's at all-time highs, at a time where, like you say, there's more uncertainty. We're having all of these issues around the world. We're having wars, but the price of gold is going up, and they might have seen this a few times. So it's good to understand and learn that as well. So gold isn't just financial; it's cultural too. From wedding jewelries to heirlooms, it carries meaning beyond money. How much do those cultural traditions still drive demand today? So you mentioned a little bit about jewelry earlier on as well.
Yeah, no, absolutely. I mean, it's coming up to an incredibly busy time for us, particularly at the Royal Mint, because as we move towards Diwali and then Eid, which are obviously cultural celebrations both here in the UK and across the world as well, gold is a really popular gifting tool for people because it's seen as, again, a preservation of wealth and a way of saving or gifting something to people for the long term as well. So we have produced more recently at the Royal Mint a range of what we're calling our diversity bar range, essentially, and products which represent a more modern Britain. So we worked with the Sri Swaminarayan temple, Hindu temple in South Wales more recently, to produce these stunning 20 gram, 5 gram, 1 gram Lakshmi and Ganesh bars as well. And that proved hugely popular in the Hindu community. So we're really careful to respect, of course, culturally. We wanted to work with the Sri Swaminarayan temple to ensure that we get the design perfect, and Lakshmi is beautifully depicted, and likewise with Ganesh as well. And then following that, we produced our Kaaba bar, which is the holiest site in the Islamic faith. Again, a 20 gram, 5 gram, 1 gram bar, and that. We worked with the Muslim Council for Wales for that particular one, and we actually donated a portion of the profits to aid the earthquake rescue sort of mission, I guess, in Syria and Turkey when that happened a couple of years ago as well. So, yeah, culturally, it spans cultures really. And as I said earlier on, before the financial crisis, 2007, 2008, such a huge portion of the gold market was dominated by British Asians buying gold, but that has really shifted now, and it's obviously a statistic that quite often is kind of overlooked, just how popular it is among the wider market now, and it was just something that culturally for Hindu people was really popular at the time.
And in culture, people love to wear gold for weddings. They love it for weddings, or any kind of important parties. Wearing gold and having gold on is like a sign of wealth.
Yes.
And I think that's maybe something that we didn't state before. When people say, "Oh, I have gold, I own gold bar," you get that feeling of wealth. Oh, you got a lot of money, right? That's kind of what you think about with it. And I think a lot of people attribute that with gold more than anything.
Yeah. And it's staggering now as well with the price where it is. I mean, the last couple of days, it's surpassed the £2,800 per ounce mark. And if you think an ounce is about the size of a £2 coin, so just that £2 coin size of gold is roughly that value. A 1 gram bar is smaller than an iPhone SIM card and is worth about £80. And then you get these 1 kilo bullion bars, which are about the size of a small iPhone, and they're worth almost £90,000 now. So it's sort of staggering where the price has got to. But you're absolutely right. I think, historically, people think of gold bullion, they think of the Italian job and 400 ounce bars being loaded into the back of cars. But actually it's so accessible now as well. There's different denominations of coins that you can obviously purchase. You can invest in it digitally as well, and through different size bullion bars. So it's a really interesting market and is open to all. And we're seeing, I obviously touched on, culturally that it spans different cultures, but we've actually seen a huge influx now of female investors as well, something we hadn't seen previously. I think during sort of COVID times, only 10% of our website sales were coming from a female audience, and now we're up to almost 30% in terms of female investors as well. So we've worked with obviously different platforms to try and stress the importance of a diversified portfolio and the importance and how gold can play an active role in hedging against riskier investments, and that's obviously gone down pretty well with that female audience as well.
That's insightful to hear, actually. And it's no surprise, especially if it's becoming more accessible. I can understand again why people would want to diversify there as well. So you mentioned some of the reasons why the price, especially this year, is going up because of kind of the issues. Is there anything else that you think is one of the reasons as to why the gold price is continuing to hit record all highs? I think even this week, I think I got a note that it hit record all highs. Actually, I should say the date, actually, just for people to know. So this is week commencing. What is this? Week commencing 22nd of September. So 22nd, yeah. September.
Yeah. So I mean, so far this year, the gold price is up 34%. So far this year in 2025.
That's insane.
Platinum is up 51%, which is staggering in itself.
Yeah.
And silver is up 42%. And I'm sure we'll obviously talk a bit more about silver.
Yeah.
But that just shows, the movement that we've sort of seen in recent times. There are such significant returns for precious metals historically. I think geopolitics plays a massive part in the price of gold as well. We saw spike as soon as the news, obviously, sadly, kind of came to light that Russia had invaded Ukraine, that we saw a huge push in the gold price then. Obviously, remains the tension between China and Taiwan, and we've seen China buying their central bank in China buying huge amounts of gold on a consecutive basis, and some of those eastern countries following suit as well, as they essentially pull away their reliance on the Western world and the US and some of these economies in the West too. So they're buying huge amounts of gold, which is driving the gold price up again. And then, of course, there's still the ongoing tension in the Middle East as well. So all of these factors have a big part to play when it comes to the gold price. And typically, it's when these bigger economies announce things like interest rate cuts that people naturally are going to pull their money away from the banking sector and move it into places like gold, where they can see these returns now, and they're really enticing, of course. But fundamentally, it will surprise you sometimes, some of the clients that come forward, certainly for us, that have such a sort of almost apocalyptic view of the way the world is going. So if all financial infrastructure and the monetary system were to break down, there's people out there, very few, I'd have to say, that genuinely believe that if they take some delivery of gold coins, that they will be able to then use them in that post, in that apocalyptic world to buy goods and food or whatever it may be. Okay. And in some cases, you have people burying their gold in the garden, and that's no exaggeration. Wow. In case that is to happen one day, and that's a very extreme view, but that does come up. I'm hearing less of that now.
Okay.
Than maybe when I first sort of started in this world. It's more of a kind of sensible move into gold as an investment option. Yeah. But you'd be surprised what people come out with.
They think we're moving back to the bartering. Move back to the bartering system where actually it's back. Which they might not be wrong, because at the end of the day, like you say, gold holds that value, so it logically makes sense that it would still hold value in the future, even if in that type of world where you could still utilize that, because people would still like it and flock it in, like you say, is good to see, and it's stood the test of time. So I can definitely understand that. Did you see a large push into gold when the tariffs came out? Because that earlier this year there was obviously that had a bit of a bit of a response to it as well. Yeah, I mean, that caused a bit of a knee-jerk reaction in the precious metals market, and of course, a lot of the gold that the US are reliant on is stored in Switzerland and then shipped across to the US, and then that was essentially heavily tariffed, which came as a huge surprise and sort of shook the precious metals market quite considerably. Something else we haven't necessarily touched on, which is again at play in all of this, is BRICS too. So obviously this group of nations that are moving away from their reliance on the West, Brazil, Russia, India, China, South Africa, and are implementing things like their own monetary system. These are some of the big economies that are buying huge amounts of gold at the moment, and are utilizing gold as a reserve asset and sort of moving again that reliance away from the dollar, so de-dollarization. And that again is having a big impact on a bigger scale within the gold market. And then on top of that, we're seeing a lot of sort of momentum buying, I think, from investors too. So all these factors are at play. That's a very intriguing point, actually.
Yeah.
The fact that you said that, because that would make sense as to how that could also drive the price if whole nations are buying gold, right? If you have governments buying gold, or let me not say back, it's almost like backing it, right? Like is if it's the same as if governments were backing Bitcoin and investing whole in Bitcoins. You could definitely see a surge in that too, right?
Yeah. So, I mean, in 2023, BRICS nations were the biggest purchases of gold.
Yeah.
In 2023, I think China bought something like 225 metric tons of gold, which is the single biggest purchase of gold across the course of the year in recorded history, as I understand. So, again, it's that sort of split between the West and the East that is certainly at play at the moment, and the tension that is there, and more countries are joining BRICS as well over the course of time. So it's a really interesting point economically and politically across the world, I think.
Yeah. In that, in these different surges that have happened across like platinum, silver, and gold, is there any surprising new behavior that you've seen amongst like UK investors?
Well, I would say the most surprising thing for me at the moment is you'd anticipate that a lot of customers would be selling given the gold price is so high. The last few days, we've seen, and usually the average is 9 buy transactions to every 1 sell transaction through our website on our trading platform. We've seen 17 buys to every one sale. So it just shows that people don't think that the gold price is peaking sort of anytime soon. And then on the, so silver and platinum are an interesting one in the UK, because when you're purchasing both, you have to pay VAT on top. So that 20% often puts investors off. As you can imagine, you've got to make a pretty significant return. Obviously, based on the numbers this year so far, you'd have already made that return and then some. Yeah. But that puts a lot of investors off. But there are ways in doing it without actually having to pay the VAT. So, for example, the Royal Mint, we now give customers the option to buy silver and platinum through something called Digi-Silver and Digi-Platinum, which means they can circumnavigate the VAT, but they never take physical ownership of the metal itself. Okay. It's all physically backed and stored in the vault in South Wales, and they can incrementally buy it, but it's a way of doing it without actually having to pay the VAT. So that has then led to a real sort of uptick in sales, certainly from our side of things as well. And I think, once you get into one of these sort of metals, the interest then sort of moves to the other ones as well. And silver and platinum are really interesting because typically there are more industrial uses for both than that of gold.
Which is interesting, right?
Yes.
You think that surely that should have more value. Maybe some people are betting that over time it will have more value because, like you say, it's going to actually have some use to it as well.
Yeah. So, silver is heavily used in renewable energy, so it's a key component when producing solar panels. Platinum historically has been used as a key component in catalytic converters. So as we move to electric cars, the demand for that has dipped slightly, but because a lot of the platinum in globally is actually mined in South Africa, and there's a lot of infrastructure issues in South Africa, supply is waning slightly. So that means the price has gone up because there isn't so much of it sort of awash in the market. But yeah, just going back to, I guess, to customer sort of trends. I mean, we in the UK, for bullion coins, because of the CGT exemption, we're just seeing consecutive quarters of record sales because people are utilising that as a safe way and a tax efficient way of holding their funds, and they're seeing that return on their investment as well.
Yeah. Is there any conversation happening around like the valuation of gold currently where it's at? Like that it feels like, because obviously whenever anything's at like record highs, it's like, ooh, is it a bit overvalued? Has there been any conversations that you've been part of, or any thinking around that? Like, oh, actually.
Well, so the interesting element is not necessarily with gold, but perhaps if we shift attention to silver, I guess this could go one of two ways, really. Yeah. The ratio in terms of value of gold to silver has always been measured quite kind of carefully, because typically if gold goes on a bit of a run, silver will kind of follow suit as well. Okay. And the current ratio, as I understand, is you would, for every 1 ounce of gold, you would need 85 ounces of silver to make up that same value. And I'm going to have to get my numbers right here. But I think essentially, at the moment, there's this feeling that silver is undervalued because historically that was smaller. You'd need something, I think, going back to 2021, you needed about 65 ounces of silver to make up 1 ounce of gold. So there's belief that either the gold price maybe might dip or the silver price will come up to kind of meet and level out again a little bit. But in terms of, I guess, long-term trends, because there's still such a huge amount of US debt, and uncertainty and reports of inflation and interest rate cuts in the US. Yeah. Uncertainty here as well. We've had sort of 2 prime ministers in France as well resigned, given the sort of economic situation in France and some of these big economies. It doesn't feel as though, and as much as Trump likes to sort of say he's solved several wars across the world, 2 of the biggest ones, or at least the most broadcast ones, are still very much at play, and it still feels to me and a lot of people, certainly a lot of commentators that know more than me, that there's still a lot of uncertainty to come, and it's during those times that really people push towards gold. Okay, that makes sense. And thank you for sharing that stat around the ratio to gold to silver. I think that's going to be very
enlightening for the people listening, especially if there's something that they want to explore. So I want to look at the other side, right? Before we talk about investing in gold, if people are wondering, we are going to be talking about that. If gold were to fall sharply in the next few years, it doesn't have to be like 2-3 years, but just in the future, what would likely cause that for it to go the other way?
I guess a continued period where inflation had been tackled in those bigger economies, and I guess boosted interest rates as well. A pickup in interest rates. These are the two in those bigger economies, the two bigger factors. And I think really it's the geopolitical tension globally as well that would probably cause a dip in the gold price. Okay. Those would be the main factors, I think, really.
Okay. So it would be if inflation came back. And sorry, what was the other thing that you said? Interest rates?
Well, yeah, interest rates pick up, I think, would be, because typically the two are sort of negatively correlated.
Yeah.
And then I guess more certainty in the stock market. So people are sort of looking for more returns there again. Because again, when you are investing in stocks and shares, you of course own a portion of a company potentially that may not be around for kind of years to come. Whereas again, gold is tangible, it's physical, it's a scarce commodity, and it's something you can kind of have at home that kind of is. But I completely take your point earlier on. Where is that kind of inherent value from? That's the kind of interesting thing, and I think it's just history that sort of tells us that really more than anything else. There's no real answer.
What we're like with humanity. That's what we are like. We place value on what we place value on, and I think that's where the arguments for Bitcoin comes in a little bit. But yeah, and again, I don't want to spoil that part, but we'll talk about that soon. So so talking about investing in gold, so you mentioned a few, but what are the different types of gold investments available to people today, and what are the pros and cons of each of them? So
I think the main point to get across really is how accessible gold is now as an investment option, whatever age or your financial situation. I don't want to just... There are, of course, other retailers and producers of precious metals products. If we start with physical investment, you, of course, have bullion bars and then bullion coins as well. Bullion coins are so popular here in the United Kingdom because of their capital gains tax exemption. It's because they're viewed as legal tender. So in effect, with a coin, you could go into the shop. You wouldn't want to because of the value of the gold in it and say, I want, a punnet of grapes for that gold coin or whatever it may be. So they are exempt from capital gains tax. So they are far and away the most popular way of investing in gold for that very reason. Now, of course, because not everybody can afford a 1 ounce gold coin, which at the moment is around about £2,800 per ounce, because we do an ounce is the unit of measurement in the precious metals market. It's where we see all the pricing from. We produce fractional coins as well. So in effect, you could buy half an ounce, a quarter of an ounce, tenth of an ounce to start you on your investment journey. Due to economies of scale, of course, if you can afford to get to an ounce straight away, that is a slightly more cost-effective way of doing it, because we have manufacturing costs. That means you pay a premium on top of the gold price when you buy those particular coins. You have bars. Whether it's a 400 ounce bar, which is, about that big, or a kilo bar, which is about the size of a small iPhone. Again, it's a more cost effective way of buying physical gold than, say, coins. But with the bars, you don't have the capital gains tax exemption that you do with the coins.
So you have to pay it only when you sell?
Only when you sell. Okay. Yeah, absolutely. So that's kind of a bit of a drawback when it comes to gold bars. But if you want exposure to physical gold in your hand, or at least the ability to have it in your hand, and in the most cost-effective way possible, people buy bars. But typically, they follow the gold coin route because of the capital gains tax exemption. If you're a young investor starting out and you haven't got enough, I guess, disposable income or money you wish to save to maybe buy a gold coin or a gold bar in the first instance, we have a product called Digi-Gold, which essentially means that for as little as £25 per transaction, you can own a slice of a much larger 400-ounce bar that sits in the vault over in South Wales, which is where the Royal Mint is based. And you're effectively pooled in with lots of other investors that have a portion of that 400-ounce bar, if that makes sense.
Yeah.
And then you can log into your account, see how much, it might be 0.01 ounces of gold. You can see how that's performing really clearly based on the pricing feed that we have on our website as well. And that's quite a nice way of just tucking a bit of money, minimum £25 away into gold a month, not thinking too much about when you're getting in, because it kind of balances itself out over the long term as well. So that's a really popular choice for a lot of investors, because the fees are really low as well to get in. It's rather like buying a share. Yeah. And then finally, there are others out there, of course, but we have an exchange traded commodity product which sits on the London Stock Exchange, which people can invest in. Again, in terms of exposure to gold in the products that we offer, that is the most cost-effective product to purchase because of the low basis points, the low amount of fees getting in and out of owning that. There are other products on the market, of course, that are actually better in price than the Royal Mint, but we pride ourselves on the sustainability angle of that. So almost 60% now of that fund is recycled bars. So this is metal that we have accrued through our supply chain, or whether it's gold that has been extracted from electronics to then produce gold bars. That fits that 60%. And then we even give businesses the opportunity to buy gold. So if there's cash that sits within, a business that is maybe not necessarily performing as well as it should be because of low interest rates, you have the opportunity to buy gold through your business.
Oh, really?
Which is quite is actually one of our fastest growing products at the moment as well at the Royal Mint. And then we obviously offer customers the ability to buy gold through their SIP and their SAS pensions as well. Oh. So we work with pension providers, whether it's AJ Bell, Hargreaves Lansdowne, whoever it may be, to give customers the opportunity to expose themselves to physical gold through their SIP or their SAS pension as well. So there's all manner of products. It could become a bit confusing, but there's kind of something for everybody, whatever age you are. Some people choose they might sell a property, for example, and move a significant portion of their funds into gold in one chunk. Others like to spread those payments out and kind of expose themselves to a bit more of a fluctuating price. Yeah.
So I appreciate you giving us a wide spread of that, because I think it's very informative for people to understand. Look, if you want to get into gold, there is definitely routes. So it sounds like the more accessible routes or the lower cost entry are like the the gold ETFs or the Digi-Gold, as you mentioned, as well. Those are like some of the more cheaper options. And then for some people, I guess what they could do, potentially, they could start investing those ways. And then as they accrue more money, if they really want to do the coins, the gold bars, if it's up to them, they're very interested in that, they can do that. So over 70% of people who watch these episodes are subscribed. If that's you, hit the subscribe button. It really supports the channel. It helps it grow. And most importantly, lets us keep bringing you valuable conversations like this one. Plus, you'll be the first one to know when new episodes drop. Thank you so much for your support so far, and enjoy the rest of the show. This ties me into my next question, right? About the most secure way. So if somebody was interested in buying bars or gold coins, what's the most secure way of buying, selling it and storing it? Because obviously a gold bar is very valuable. People know that, right? So obviously you don't want to get robbed or stuff like that. And obviously you want to secure it. What's the ways that you can kind of do that?
Yeah. So, I mean, there's two things there. There's the storage, and then there's probably the counterfeiting side of things as well, because that in the market has previously been a hot topic, and we've taken measures to ensure that isn't easily done with the products that we produce. When a customer of ours, and I can speak on behalf of the Royal Mint, comes to purchase a gold coin or a gold bar, they have the option to store it in basically one of Britain's most secure locations, which is our vault in South Wales. It's guarded 365 days a year.
Right.
Used to be guarded by the Ministry of Defence. Now we have our own security department that monitor the site 24 hours a day, 365 days a year. And the beauty of it, it's really flexible. So you could store for a period of time. Of course, there's a fee associated with that. And then take delivery of it at the drop of a hat if you wanted to have it in your possession. Okay. We always advise customers, if they are taking delivery, just make sure you've got either a safe at home or a safety deposit box, maybe at a separate unit elsewhere, to make sure that you've not got huge amounts of sort of value in the home, basically, is what we kind of always suggest. And then the second point, just on the kind of counterfeiting side of things as well. Previously, it's been sort of, well, not straightforward, but it's been possible to replicate coins that have been produced. So we've, on our 24 karat gold Britannia coins, we've introduced anti-counterfeiting features onto it, which make it really difficult to replicate. And we have a buyback service as well that can kind of, if that was to happen, we can identify whether it's potentially a counterfeit coin or not at the Royal Mint. So, but yeah, safety is really important, I think, when it comes to gold. And
put a lot of money into this stuff, right?
I know,
especially if it's the physical parts of it, right?
Yes, no, absolutely. And I'm sure, I don't know of any necessarily, but I'm sure there've been some. Well, I mean, it's been documented with TV series about Hatton Garden heists and things like that that have happened over the years. So yeah, it's really important to remain vigilant with that sort of stuff.
Yeah, I think so. And people definitely need to be careful, be mindful, not talk too much about it. Especially gold, because gold, I feel like having physical gold is so different to other things. Like, you can tell somebody, oh, I've got this much in investment. It's going to be very hard for them to crack that if they don't have your password and all of that. And there's ways that they'll have to figure that out. If you start saying you've got gold physically in your house or whatever, then it's like, wow, you're putting a target on your back for, where it's not necessary. Counterfeits in terms of bars, have you seen a lot of that? Is it just more on the coins?
It's been more on the coin side of things. We've not seen a huge amount on the bar side of things, no. So,
And what's the transacting side of it like in terms of outside of the Royal Mint? So for instance, let's say, I don't know, I bought something from the Royal Mint and I'm like, you know what, I want to sell it, but not sell it to somebody else, but like outside. Yeah. What's that? How do people navigate that and make sure that, again, they're quite secure? They're not just like buying it off, like, again, somebody's trying to do fraud or anything like that.
Yeah, it's an interesting dynamic. There's loads of really reputable bullion dealers, if you like. Even the word dealers sometimes.
Yeah,
I think actually one thing the Royal Mint is trying to do, and a lot of the other big retailers in the market, is trying to almost remove that stigma that the gold market in some way could be a bit I was going to use the word dodgy, but do you know what I mean? There's kind of a bit of a sort of almost stigma attached to it, or not necessarily trustworthy. But yeah, I mean, if you were to purchase from the Royal Mint, there's loads of reputable dealers out there that you could effectively go to and sell back your gold once produced by the Royal Mint. There's a weird dynamic in the UK in that our trade business supplies a lot of the retailers in the UK, but then our online platform actually then competes with them, if you see what I mean.
Okay,
so a lot of our products you'll see with other retailers, but then our online platform and my team are trying to kind of compete with that. Okay. So it's a bit of an unusual sort of dynamic at times. But yeah, there's lots of ways you can go in and have your items sort of weighed and valued and things like that. And it's just important, I think, to do research and find the reputable ones. Yeah.
On the non-physical side, right? So Digi-Gold, you mentioned you don't actually own the gold, but like your investment's like backed by it, right? So is it just as simple as, like, if we go through the different steps? So Digi-Gold is as simple as you buy and sell via Royal Mint, right? It's that simple. Obviously you have to, I guess you have to put your details and, all the kind of personal details. You probably got to do like all the securities stuff, but it's just as simple as just buying and selling.
This is everything. So, and sometimes I probably forget that I'm in it, and it is. Do you know what I mean? It can be viewed from the outside as quite complicated. All it is, effectively, if you were to buy from the Royal Mint, you create an account online. like if you were logging into Trading 212 or some of these other platforms, there's a pricing feed which shows the gold price, the silver price, and the platinum price on the top of the website. And then you have you've got an option to buy gold coins, bars, Digi-Gold, gold for pensions information as well. And effectively, you add it to your basket. You know, you select how much Digi-Gold you like, whether it's 0.5 of an ounce, for instance. You would add that to your basket, and then you log out and you can log back in and see how your investment's performing. Okay. If you buy a coin, you can purchase it, select that you want it vaulted, and you can log back into your account and see how your gold coin is valued at any one time. Likewise with a bar. If you take, of course, delivery of the coin in the bars, it's left the site, so it's effectively left the website, if that makes sense. Yeah. So you don't get sort of a real-time value. But it's as simple as logging into account, obviously passing AML compliance checks, and then you can just buy almost like you're on Amazon in some ways. It really is that kind of simple.
Okay. And then the ETF side is through like investment providers, like you mentioned, AJ Bell, Hargreaves Lansdowne potentially. Sorry, don't quote me on this. I'm not saying that I know that Royal Mint ETF's on there. I'm just using it as an example just to say, so through investment platforms like those, like Hargreaves Lansdowne, Trading 212, etc. Okay, cool. That makes sense. And obviously that way is through buying and selling your gold ETFs. Okay. I think, thank you. I think that's been very insightful for people. And have you spoken to people in like how they kind of choose between going the physical or, you know, digital route of, you know, investing in gold? Yeah,
I think so. We have a team of account managers that will always look to understand the objectives of the investor ultimately. It's why I sort of mentioned earlier on, we like to kind of understand the intentions of the investor, whether it's viewed as something for the long term, or in some cases, some people suggest they're maybe going to get into gold for a short period of time, which we advise against, because again, if it's something you think you need to liquidate after a short period of time, you do run the risk, like any other investment, of making a loss. I think some people hear store of wealth and just think it automatically almost stays at the same value, the monetary value that you put into it in the first place. So yeah, we're always talking to investors, understanding what their kind of needs and desires are. It may be that we speak to somebody that comes in and has a budget of £50, in which case I would say you might want to consider Digi-Gold to get you started. You can expose yourself to gold and the fluctuations in the gold market by just investing this £50 in Digi-Gold. It might be someone sold a property for £200,000. They don't think they're going to need the funds for 5 to 10 years, in which case we'd probably suggest you might want to consider gold coins, because in 5 to 10 years time, if you've made enough of a return on your investment of that £200,000, capital gains tax is going to come into play, and with coins you have that exemption therefore. So it's strongly sort of worth considering that. Other people very sort of strong-willed in terms of what they're looking for, and you kind of just follow their kind of path of thought at that point. So yeah, there's something for everybody in that sense.
So is Digi-Gold also a tax-free option? So I know that you said the coins are. I know ETFs can be tax-free if you have it in a stocks and shares ISA wrapper, so that'll be tax-free. Is Digi-Gold also, does that?
It's not, but it's very it's very the fees are very low in terms of the buy, store and sell of it, or the management fee. So you pay a small percentage fee on the way in, a small management fee for your holding, and then a small sell back fee when the time comes, basically. And it's you essentially get, if you had £100,000, you would get more Digi-Gold ounces for that £100,000 than you would coins. Fractionally, not huge amounts. But you'd get more gold for your money, essentially, because the fees are lower.
Yeah, and the capital gains, do you still
capital
pay
gains
that?
tax you would pay on the because effectively it's a bar.
Interesting.
And it's big. Crucially, the coins are viewed as legal tender in the UK, and that's what gives them the exemption.
Right. Okay. So the tax-free route sound like it'll be the coins and ETF options, and then Digi-Gold maybe.
Yes.
Capital gains, depending on. They don't have no like special circumstances for that. No,
and it might be that, it's why we've introduced things like business accounts, because sometimes people have a lot of money tied up within their business, however big or small it is. And it could be that the gold is liable to corporation tax within the business. But again, it's a way of sort of circumnavigating, I guess, capital gains tax in that sense. It's just treated in a slightly different way. But you're right with regards to the pension side of things. Yeah.
Okay. It's good to know these things, so because we all want to save tax as much as possible. What would you say are the main risks or downsides people should be aware of with gold?
Risks or downsides? I think it's what we've kind of doubled down on really. It's with regards to the tax side of things, and the mistake that I mentioned that individual had previously made when they wanted to get in for a short period of time. I think it is something, and the security as well that you've alluded to. I think it's doing your research, understanding what investment option is right for you, the tax implications of owning gold in a specific form, and then making sure it's securely stored, and being on top of it in that sense. For me, those are the biggest sort of risks and downsides. And I think, and it's not expecting immediate returns as well. It should be viewed as something that should be a portfolio diversifier, something that you have a sort of small portion of to kind of hedge against riskier assets like cryptocurrency, for example. Yeah,
exactly. And to talk about gold, do people talk about gold and inflation, like in terms of it outpacing inflation? Because a lot of the reason why people talk about investing in stocks, it's like, to outpace inflation. Is that a similar type of mindset with gold?
Yeah, absolutely. It is viewed as a hedge. That's the primary sort of benefit, I guess, for gold. It's viewed as a hedge against inflation. Money sat in the bank is devaluing as inflation rises, whereas with gold, you hope that the gold price, and it certainly has done in the last 10, 20 years, will outpace those inflationary rates that we've seen. So historically it's proven as an excellent option during those times, and certainly in recent years when we have seen high levels of inflation.
So this was an interesting question for me, right? So the Mint vaults must hold a lot of gold, and I'm sure it must be quite intriguing. What's something surprising about how gold is actually stored or handled behind the scenes? But obviously giving out too much away, because obviously, people's security on the
so I mean, we're at the Royal Mint, we have around £2 billion worth of metal in terms of assets under our management at the Royal Mint. The vault itself is bomb proof.
Okay.
There's very few people that know where it is on the site, or have ever been near it or in it. So it's a bit of a mystery. It's heavily protected, but it is all everything that sits within it is accounted for ounce for ounce, and labelled for our customers. So if you were to purchase a tube of 10 gold coins tomorrow, that would sit in the vault, separated under your name, protected for when you want to maybe either sell it or take delivery of it. Wow. But the Royal Mint, I mean, we've been based in South Wales since 1971. The Queen, Prince Charles at the time, and Prince Philip opened the site. We were formerly at Tower Hill, which is where the site used to be, and the Royal Mint itself was founded in the Tower of London, and then moved out to South Wales in the 70s. And interestingly, one staff member that worked at Tower Hill in 1971 is still working at the Royal Mint in South Wales in 2025. So that's quite interesting. I've kind of moved away from what your question was there a little bit, but just a bit of the kind of history, I guess, of the site.
It's fascinating, all this kind of stuff. So I wanted to move to the doomsday example, because I think it's interesting for people to know some of this stuff. So if tomorrow the global financial system collapsed, how would someone actually use gold? Because I was actually thinking about it. I know a lot of people think doomsday is doomsday, but how could they? I think I might have given a hint, but from your point of view, how can someone actually use gold to survive, and will it really help them, in your opinion?
Yeah, I mean, there's a school of thought that you could, if we ended up in a doomsday scenario, you could go up to somebody and trade your gold coins for food, essentially. And there's examples of where gold has proven to kind of be a globally recognized currency. So I think during the Gulf War, British soldiers at least would line their pockets with gold sovereigns. So if they ever got themselves into a spot of bother and needed to negotiate their way out of a certain situation, they would give whoever was holding them captive or whatever it may be, a gold sovereign to then free them or bribe their way out of difficult situations. So gold itself is kind of a global currency. And of course, in the States until 1971 as well, gold, the dollar was actually pegged back to gold anyway, and then there was this move away. So it is this globally recognized metal. And I think, I'm sure we'd have other concerns if we did end up in a sort of doomsday scenario. But some people do believe that, and funnily enough, you get situations whereby, I mentioned the gold coins a bit earlier on, people will buy 1/10 of an ounce because they think, right, well, if I do end up in a doomsday scenario, I've got more for my, I've got 10/10 of an ounce coins to my 1 ounce that I can use to buy smaller goods and services when that situation does arise, which seems completely crazy to me. Yeah. Hopefully we, of course, never end up in that situation, but there is a sort of school of thought to a lot of investors that potentially could happen.
Mm-hmm. So. This is the thing, I think, with gold. I think it's understanding why you're investing in it, understanding realistically, what are people buying for? And I think we've talked about a lot of that, the history, how people value it, and I could see a world if that did ever happen, and nobody's wishing that yes, it could still be useful in that world. As you said, it's been used in the past. So why not? We mentioned a little bit about silver and platinum, but how should people look at those two as well in terms of, obviously, if they're interested in looking at gold, how should they also view like platinum and silver?
Yes, until the 2000s, platinum was actually more valuable than gold. The platinum price at the moment, as we mentioned earlier on, is up 51% so far this year, sitting around £1,100 per ounce. The big thing, as I mentioned as well, with platinum, unless you're buying it as a Digi-Platinum or Digi-Silver, it does carry VAT, so that puts a lot of investors off. Platinum has been quite stagnant as an investment for a period of time until this year. Silver is much more popular, I think, because it's just a lower cost. So it's sitting around £33 per ounce at the moment. So people use that as rather like they use Digi-Gold as a way of getting their exposure to precious metals. And as I mentioned, silver has significant industrial uses. And looking ahead, I think Samsung have produced some technology for car batteries whereby silver is a significant component of that. So they're discovering new ways of utilizing silver in industry all the time. And due to the ratio I mentioned a bit earlier on, a lot of people do feel as though silver is significantly undervalued. Of course, that's not sort of investment advice or anything like that, but there is a school of thought that silver still has a lot of room to grow. So it might be worth sort of considering silver as an investment option, certainly alongside gold as well, if you're in a position to do so.
Yeah. Okay. No, thank you for that explanation. I think it helps people to think about it. And when you say platinum was more expensive than gold, I do feel like I remember platinum being very highly valued, and I don't know what's happened to him, why it's kind of lost its way.
Yeah, and typically platinum jewelry is more expensive than gold jewelry.
Yeah.
I think that's because it's more difficult to, I guess, manipulate in a way or melt down to actually produce some of the pieces. I mean, it's an interesting one because, as I mentioned earlier on, these metals are commodities. And if we were to fill Olympic pools, obviously it's 3 Olympic pools for all the gold that's above ground and up to your ankles of 1 pool for all of the platinum melted down. I think a lot of people kind of look at their jewelry and think, they've got a lot of value on them. A lot of the time it's obviously sort of gold plated. I think when people buy jewelry, sometimes they think it's a kind of an investment, but you actually are paying quite a significant premium on top of the inherent metal value to actually own it. But yeah, platinum, I think for that reason is obviously more expensive than gold when you buy it in that form.
Yeah. Another thing that has been going up just as much as, well, not just as much, but going up a lot has been popularity. Bitcoin. Yes. Bitcoin has gone up. A lot of people refer to Bitcoin as digital gold.
Yeah.
Do you think Bitcoin threatens gold's position as a store of value, or is there room for both? Obviously, I know you're coming from a gold perspective, but it's always interesting to hear how, different parties think about it.
I think there's room for both. I mean, in terms of sort of similarities, store of value, hedge against inflation again, the lack of centralized control on them as well, unregulated. So those are the sort of similarities, and are recognised globally as well. So we're on stock exchanges all across the world. The big difference being that gold is tangible, Bitcoin is digital. Gold has history backing it up, which I feel like is a point I've laboured quite a lot during this chat.
Yes.
Whereas Bitcoin is much more mature, and with that, I guess, comes volatility as well. But to me, it feels like there's place for both, really, in a balanced portfolio. I think if you're to look at the tangible digital element of it, the two can kind of nicely balance each other out in an even portfolio. Of course, you wouldn't want sort of overexposure to either. The World Gold Council, who of course are the governing body for gold and want to promote gold as an investment option, modestly recommend somewhere between 2 and 10% of your portfolio should be in gold. So there must be place for both gold and Bitcoin if you sort of follow that rule of thumb.
Mm-hmm. And I guess is that, and thank you for talking about the sizing, because I think this is very important for people to understand. When we talk about all these different types of investments, it's not about going 100% in just one investment, 100% in property, 100% in gold, 100% in crypto, 100% in stocks. I think that's where you put a lot of risk, or you invite that risk onto yourself. It's about tried to have a bit of a balanced portfolio that is obviously, works towards what your risk appetite is and where you're comfortable. And that's how people need to think about it, like having a whole, balance. It's like having a balanced diet.
Yeah.
Right? You just don't eat junk food every day, all day. That would be bad for you, right? And I would say eat healthy food as much as you can, but maybe sometimes that will be boring. So you want to balance it out with a little bit of junk food.
Yeah.
So I think it's interesting is good for people to think about that. So where do you see gold demand in the next decade, next 15, 20 years, even the next 5 years? What's the thinking around that?
Well, I think based on what I said earlier on in terms of the popularity among younger generations, and the exposure gold is now having to the global market, it's become a real kind of valued investment option, whereas previously it was maybe viewed in the 2000s, like I mentioned, that sort of small portion of British Asians that were accounting for such a big part of the gold market. During that time, you wouldn't have sort of thought we'd get to a point here now where we've got such a high portion at the Royal Mint of female investors, millennials, Gen Z investors as well. So it's had that kind of exposure, and the fact that they're beginning to build up their portfolios maybe a good indication for demand when people of that age group are in more established jobs and they're earning more money and they have more money to put away and utilize different investment options. And then I guess in terms of the price, it's very obviously difficult to, I guess, predict the future, but in terms historically, the things that have moved the gold price or have at least had an impact on the gold price have been the financial crisis in the late 2000s, recession, more recently COVID, Middle East tension, tension in the banking sector, or uncertainty in the banking sector as well, has all led to price increases with precious metals, namely gold, and inflation as well. And if you look at, I guess, all of the uncertainty around the world, we've mentioned BRICS, we've mentioned the debt situation that the UK, the US, France, Japan, some of these big economies find themselves in. It lends itself to gold continuing to perform. I don't think we sort of see a situation, or certainly the World Gold Council don't see a situation in HSBC, who we work quite closely with, a situation where gold is going to dramatically drop in value. It might be that things are caught steady, but it feels as though it still has a place. And then again, this is why, you need to kind of view it as a long-term thing. It might be that you got in now and the price does cool off a little bit, but you need to be prepared to then hold that for years to come, because it has gone through significant periods of time where it hasn't really shown huge volatility, and then obviously more recently taken off.
Okay. Yeah. I think it's definitely food for thought. And like you say, it's got that history, it's history back. So it'll be interesting to see where it lands. AI, another hot topic. We're having a lot of trends happening. How do you see do you see AI having an impact on gold?
I was chatting to a colleague about this, and obviously big institutions have used algorithms for trading based on certain prices for 40 years now, as I understand. And I think, so it's kind of, I think the view is that AI would be able to intervene at a point or at a price point that, and predict when the price is maybe likely to increase in the future based on historic data. But then my colleague said to me, rightly, would AI have predicted the rise of Netflix, for example? It requires a degree of creativity, belief, and luck, and I'm not sure sort of the AI can kind of recreate that, basically.
Okay.
So there's going to be a place for it. I mean, I think AI, importantly as well, is going to have a place just when it comes to the, we've spoken a lot about how you buy, sell, and store gold on our platforms, and the efficiency in which you can do that and the accessibility of it, which confuses a lot of people at times. So I think AI can have a positive impact there, and helping you get the answers, of course, that you want. We're using ChatGPT and other tools all the time to find out information. So hopefully it'll educate us more and help us make more sensible decisions, I think, based on historical data. But I don't think it's going to have a negative impact. I don't think we felt as though it's going to have a negative impact at all.
Yeah. Okay. So it might help, like in terms of like maybe the facilitation of buying and selling gold, and maybe price predictions is a lot of investment firms might use it for, but the actual impact on gold itself as an investment, probably not. Yeah. And I think that physical aspect of it, the physical world, is so important, and I think it's going to become much more important. A lot of people are talking about AI. Hopefully, I don't think the physical world is here. That's the real world. Digital, it's not that digital world is fake. It's just, let me not say it like it's small, like it's just an add-on, because that'd be bad. But it supplements the physical world, right? And gold is in the physical world, like you say. It's something that we interact with, or people interact with a lot. So. Yeah,
and it's interesting. I mean, we've not really touched on it, but we have one portion of our business is our collector coin business. And there's incidences whereby, for example, a coin that there was only a handful of coins that were produced for Edward VIII before he was abdicated in the 1930s, making way for King George VI, the father of Queen Elizabeth II. Only a handful of coins were made. So these are scarce, these coins. They're sovereigns. Metal value today, £600. A couple of years ago, they auctioned for over £1 million. They're viewed as a piece of artwork, something that somebody can have, hold, tell a story about, entertain friends about. Obviously, not every circumstance is like that. You shouldn't view them as an investment. In some lucky circumstances, a collectible coin will go on and fetch something like that. But just going back to your point on sort of having something to hold, people like having cool things, and if that can be a sort of store of wealth at the same time, or something that accrues value, then even better. In the same way as we collect art, I guess, and antiques.
Exactly.
So yeah, it's interesting.
Yeah. Thank you so much, Toby. This has been a very, very insightful conversation for me, and I know that the audience has definitely, or I should say the community has also definitely learned a lot from this episode. If you could leave one lasting message for younger investors about gold, what would it be?
Get into gold. I think don't worry about it not being accessible. Irrespective of your budget, there's an option out there for you. And just be really careful and read around and do your research, because I've been a culprit of not doing that across the board when it comes to investing previously. I think that would be it from me.
Amazing. Thank you so much. Like I said, it's such a great conversation where we talked obviously about the history of gold, talking about why gold matters and the value of it and the ways that you can invest in it in so many different ways and how it's more accessible than it has been before. So really appreciate, all the education and knowledge that you shared with us, because it's been very valuable. I think we have talked about gold before, like in terms of coins, but we've never spoke about gold in this much depth to give people an understanding. So I really appreciate you, spending the time to share that with us. How can people connect with you if they're interested? Obviously connect with you and stuff like that.
Yeah, I mean, me personally, obviously LinkedIn and stuff, but the Royal Mint, we're not, as an organisation, there's 1,000 employees, but we're not,
it's not that big, right?
Yeah, but predominantly that's on the manufacturing side of the business. So we've got a comprehensive website which I'd suggest viewing, with loads of articles about precious metals investing, and you can find me or the team's sort of contact details via that, and we'd always be happy to talk to anybody about it all in a bit more detail.
Okay, amazing. Thank you so much, though. We really appreciate it. Do you have any final words for watchers and listeners? Any final messages?
Just thanks for listening to me rabbit on, and really appreciate your time as well.
Thank you so much, Toby. Thank you for tuning in to this week's episode. See you next week's episode. If you enjoyed this episode, share your favorite part in the comments, tap the like button, and subscribe to the channel. Your support is really appreciated. We'll keep working hard to bring you more valuable conversations.